Hello everybody, welcome back to the channel. If you're wondering how to test the Stochastic RSI and how to use it to catch reversals, then this is the video for you. Stick around to the end of the video and find out the exact way you're going to want to use the Stochastic RSI. So in order to catch reversals with the Stochastic RSI, there's a couple things that we need to do. First of all, let's take a look at what the indicator itself looks like. So the indicator has two lines, right? This blue line, this orange line, and then it's got two bands. It's got the top band set at 80 and the bottom band down here set at 20. Okay. So what we're trying to do is we want to find out what's the best signal to use. Okay. So let's kind of break this down. When you zoom out from an indicator, it looks very noisy, right? It looks like there's a ton of stuff, but really once you break it down into its most basic component parts, it becomes a lot easier to understand. So there's three different ways we're going to test this for a reversal. The first way is whenever this blue line crosses below the band. Okay. So that's the first way. The second way that we're going to test is when the blue line comes back up above the band, the lower band right there. So that's one, and this guy is two. And then the third way that we're going to test this indicator is whenever the blue crosses above the orange. So that means that there's a signal right there, a crossover, and the blue line is still below the orange or the lower band down here. That means that you see this here, the blue line crosses above the orange up here. So we're not going to be taking that as a signal. It has to be below the 20 line here. That means that the price has fallen more than normal and now it's coming back up. Okay, so those three ways we're going to test, and let's see which of those three is the best way to test or to use the Stochastic RSI. So let me clear all this here and let's get back to the chart. So first of all, let's run the test of what happens when the blue line crosses below the 20 line. Okay, I've got it set up here. So just so you guys can see, you see this blue line crosses below the 20 line right there. So we take a long position, we buy at the very opening of the next candle. Same thing down here, it came down again. So we bought at the very opening of the next candle. Happened here again right there. Didn't happen for a while until down here. And then we took a buy at the beginning of the next candle at the open. So let's see how that did. If we did a 1% stop loss, 1% take profit, which is pretty small for the daily chart, but just to see the reaction right away of what happens right after the signal, you can see that the signal is not very good, right? We lost a lot of money here. We would have lost a lot of money if we were putting real money in it, and then gained a little bit at the very end, but we're still down. So let's see what happens when we move the stop loss to 5% and our take profit to 5% as well. We would still be down. Now, you may look at this and say, well, if our stop loss was a 5% and our take profit was at 1%, actually did that the opposite like that, then this would be in profit. Now, that is possible, but you have to remember that during this time frame, look at what Bitcoin was doing, right? It was going from basically zero down here all the way up to 15,000, around 15,000 what it is now. So we don't want a strategy that's just going to work just because simply we're in an uptrend, right? So if we move our, say, a stop loss to 10, right, it's even going to grow even more. That's because, you know, Bitcoin isn't dropping 10% as much as it is going up in 1% intervals. So that's why a good way to test this is just by giving the stop loss the same as the take profit, because we're really just not looking at the overall result of the strategy or the overall result of the instrument that we're trading, in this case it being Bitcoin. What we're looking for is what happens immediately after the signal comes through. That way we can determine whether this is a good signal or a bad signal. So far this one's not looking too good, right? So let's test our second signal. So our second signal is going to be the blue line coming back above the 20 band. So that means that the blue line came down, hung out for a little bit, and not until it went back up, that's when we take our buy, and let's see how that does. Okay, here we are now. So again, the blue line came down and you see we didn't enter a trade. And then we waited until the blue line came back up above the 20 line down here. And that's when we get into a trade. So let's see how that results. So with a 1% stop loss, 1% take profit, we're up 26%, which is already in profit, which is great. And now let's move our stop loss to 5% and our take profit to 5%. And let's see how that does. And we're up 62%, over 89 trades, 57% profitable trades. So it's not looking bad. That's 0.73% per trade. So this is definitely something that I'd like to explore more. Maybe start adding some confirmation indicators to this, see if we can make these results much better. But that's something that we'll be doing when we start building our actual strategy. Right now, we're just trying to find out the signal. Is the signal good, or what is the best signal to use for this indicator? So now our third indicator, or our third test, I should say, that we're going to test is the blue line coming above the orange line and the blue line still being below the 20 line. Let's see how that does. When we have a type of signal that the blue line still has to be below the band when there's a crossover, we actually have much fewer signals, which can be a good thing, it can be a bad thing, right? So like this right here, we would not go in because it just didn't dip far enough down. Here we would go in, and then here we would not. So there's going to be a lot of signals that we had before that now we don't have. So let's see how that strategy performed. So we would only be up 6%, which was compared to 26% in our last test. And our stop loss take profit moved to 5%. We're actually down 0.81%. Okay, so just based on this quick test alone, I have to say the best way to use the stochastic RSI is to take a signal every time that the blue line crosses back above the 20 band down here. So it doesn't matter. Don't wait for the orange line to come down here. Don't wait for a crossover of the bands. Just wait until the blue line crosses back up above the lower band, and that's going to give you the best signal if you're trading with the stochastic RSI. Now, if you're looking at all this and you're thinking to yourself, you know what, man, there's so much to learn here. There's so many different points of data to look at. Maybe you just don't have the time to come up with your own strategy. If that's the case, then you may be interested in copying the strategy that's taken me years to develop. You can start receiving trade signals that I use personally to trade and that are geared to work in the 2021 markets coming up. So check out the link below, see if that's something you might be interested in. After you sign up, you will instantly start receiving my signals to your phone through the Discord app. The signals you get will tell you exactly what to buy and at exactly what price you're going to want to buy. It also tells you where to set your take profit target, so you don't have to think about that, as well as where to set your stop loss target. So when the chart turns around and starts going the opposite way, you know exactly when to get out, so you cut your losses as much as possible. This means that all the work is done for you in advance. Once again, click on the link in the description. See if that's something you'd be interested in. Thank you guys for watching. Until next time, goodbye.